How's it going today? Today we're going to talk about they're going to ask the question and think about, is there too much fear in the market? And I have to say almost yes. I mean, every single time. I don't, so don't, I know I made a video about the 2020 recession and what could happen and how to prepare. I can leave a link down there. But it's almost getting to the point where you turn on the news and all you hear is fear. I mean, it's almost to the point of they been going on. I mean, there's so much fear in the market anymore. There has to be probably more fear than greed anymore. So essentially, and it's like the old saying, bull markets normally, they don't die. They die when everybody's happy and it just keeps going up. I mean, look at the 90s. So, I mean, normally they don't die when everybody's saying it's done, it's over, because then nobody's buying. So it's not really over. It doesn't get to that overvalued stage. So, that's kind of, I'm looking at it. I mean, I've seen this. I mean, it's probably as bad as 2016, and we all know what happened in 2017. So, I mean, 2020 might be the sleeper year. Almost, I'm thinking it might be a good year. If they keep doing on with this, and we're going into earning seasons, and there are some risk around the world. I'm not saying there isn't, but nobody's really. I mean, you hear, all you hear is 2020 recession. We're going in a recession. We're already in a recession. It's almost to the point, even if I believe if we have a recession, it's almost, it's so bad that Dave Ramsey's talking about. They made a video on it. I didn't watch it. I don't know what he said. I really don't listen to Dave Ramsey of the world. But anyway, what he was saying, and he had a video, is there a recession? I mean, Dave Ramsey. I've never heard, some other ones. I mean, it's almost mainstream. Like, we're in a recession and the economy's horrible. And it's crazy. And then it's election. And let me tell you something. Don't ever buy a company based on any election. You will probably lose money. I mean, it's stupid. Never do that. I've seen people in 2016 when I was in here, people were not buying it because of Trump. And then people were buying it because of Trump. And then people bought U.S. Steel because of Trump. And, well, U.S. Steel, it did not do well. I mean, it's almost down 70%. So, I mean, do not. Because they were thinking, oh, Trump's going to get in there. He's going to change things. He's going to build this infrastructure and steel, steel's going to be this and used. So steel prices are going to go up and everything. But it didn't happen. I mean, everybody was leading on that. I mean, because of Trump. Never buy a stock because of a president. I mean, that's kind of going on a tangent. But never, ever buy anything on because of the president. And don't sell a stock. Like, a lot of people selling, was that United Health Group or whatever, United Health thing, because of Elizabeth Warren and that healthcare thing. I mean, it's almost to the point of craziness. So, I've seen it before. I mean, I went through all the elections and all that, I've been in here for 2013, and I remember in 2015 the world was coming to an end, and it didn't. It was supposed to come in the world of, the stock market was going to crash in 2016. It never happened. Every single time they say it's going to happen, it didn't. And Trump's going to get in there. But anyway, so I believe there's just too much fear in the market. And actually, it's almost could be setting up a melt up. Basically, I explain this idea of everybody, let's say, all these people are short, and that means they're betting against it. That means they're loaning, they're getting shares, and they're selling it, and they're waiting for it to drop so they can buy it back and sell it there. So, basically, that's what's going to happen. Almost, that's kind of how a short squeeze kind of happens. It doesn't crash. So, someone goes, oh, well, then it starts going up, and then they get squeezed out of their position because whatever happens, maybe there's a trade thing or this or that, and then they get squeezed out, and it pushes up the S&P even higher, or the Dow Jones in these stocks, they get pushed up even higher, and then everybody goes, oh my God, the recession's nowhere in sight, the record all-time high. Then everybody pours their money even more, causing more short squeeze. So essentially, that's kind of how does a melt-up happen. So, you got to watch out. If we got a big 20% jump from where we're at now, watch out, because it might come crashing back down, because it could be a short squeezed or something like that. I'm not saying there will be, golly knows, but I think that's almost what happened in 2017 when the market kind of shot up. The tax cuts did help, and it was some some fundamentals, but I believe a lot of people are betting against it, and they could get squeezed out and push the market up. It's almost like once it goes up about 5 or 6%, if it pushes up, that everybody goes, oh, close, clear, better pour money, and it squeezes them out even more. So you have to watch out for that. But I believe there's just almost too much fear. And, you hear it everywhere on the media. I mean, everybody's saying 2020 recession. I mean, there's so much negativity. It's almost like we believed it and we said it so much, so it must be true. Everybody, but in all reality, nobody knows anything about, it's just like, think about 5 years ago. You know where you were going to be at 5 years ago today? You know what I mean? So, no, you probably don't, you know what I mean? So, did I think I would be making YouTube videos and talking this thing? Probably not. No, I wasn't. I tell you that much right now. Maybe that's just my life. Maybe someone could perfectly predict where they're going to be out in 5 years. But you're going to predict the economy? You can't really control the economy. You control your life, and you don't. You know what you can't predict what you're going to have for dinner in 2 months. You know what I mean? You're trying to predict these things. So essentially, don't get scared out of the market. I don't believe it's almost time, but I believe keep a little money on the side just in case we do have a downturn or a slowdown or recession, whatever you want to call it. Be prepared for that. You don't want to get killed in it because it could be one, but you could say that every year. You could almost say it every year. And I always had someone tell me that the market goes up 2 out of 3 years. So if you say the market goes up every year, you're actually right 60% of the time. If you say it's going to go down, you're actually right about a third. You're only a third, so it's better just to say it's always going to go up, and you're majority of the time you're right. That's just how the stock market goes. So essentially, even if we get a pullback, I did some valuations on the thing. I could leave a link down to that. Are we in a bubble? See where I believe it might pull back to if we get a pullback, but really, I think the economy is doing pretty well, as long as we get a decent unemployment level. Because you can't have a recession if you have no inflation, interest rates are lowering, and high unemployment. It's just never. You can go back for every single recession. There's never been a recession caused by low unemployment. Only time there was low unemployment and it led into a recession when we had high inflation, which we have no inflation, really about 2%, which is about what we're shooting at. And they're cutting interest rates. Cutting interest rates to heading into a recession, I don't see that. If they were, it was a lot different story. Way back when they were increasing it, because they almost could have slammed us into a recession almost. Now they're cutting it. But let's just say they could go crazy and just start, maybe the trade war escalates and it causes some inflation, then they go tighten it and smash us right into a recession. But really, they're almost kind of boosting the economy up. Boosting the economy as we go down. It could be a soft landing. It wouldn't be. In 2007, they were tightening it almost. They were tightening it. The interest rates went up. Over. I think it was almost 14 times in a row. That we're not there. Interest rates were a lot higher. Bonds were a lot higher. And really, the stocks are like the only investment group in town. So if you're not buying stocks, what are you doing? Putting it in a bank and getting 2%? Then you're losing money because of inflation. Are you putting in bonds, a 10-year? And you're getting that, So, there's no really, maybe real estate, maybe. But even then, it's actually real estate's actually be all right, almost. It depends on the area, but I'm not a real estate expert. But, I normally stick to stocks. But anyway, really, I just don't get all this fear. So don't get feared out. Don't just be prepared, but don't sell a stock next time you hear a scary headline, some layoffs or something. Because 1,000, even if it's 1,000 people getting laid off, you have to look back in 2008. People were losing their jobs by the hundreds of thousands. So you have to look at it almost to that perspective, because people were. I think the jobs report, it adds 130,000 per month. So essentially, that $1,000 people losing their job is not that big, even if it's 5. Even if it jump up to almost, 50,000 people, you'll still be adding jobs. But when you lose, the Great Recession, look that up. I think people really need to look at that and study maybe the Great Recession and other recessions, maybe the 1990s recession and 1980s recession, and really kind of study them, and we're in a lot different time period than them days, because they had a lot of problems back in them days. You know, in the early 80s, they had high inflation because it's coming out of the 70s. High inflation, they were stamping on the brakes with high interest rates. I mean, you look at bonds back in them days, they were up in the 18-20%. I mean, you couldn't even, hell, even if you would lost money, let's say if you bought Apple versus that 10-year actually outperformed Apple. I mean, that's loaning your money to the government. Anyway, getting back on top. But anyway, that's all I got to say about the topic. Don't get scared out. I mean, I've seen it happen before. Just be prepared about it. Be conscious on your mind, but don't go, oh, well, we're going into a recession. 100%. There's no need for that. But anyway, that's all I got to say about that. Thank you for watching, and please subscribe, like the video, and I give stock picks and all that, and updates on them, and news and stuff like that. Anyway, thank you for watching, and leave a comment if you want a video on anything. Always leave a comment on any stocks that I've recommended that you disagree with or anything. I'm always open to any comments or anything like that. I always try to get back to you and answer you. But anyway, thank you for watching. Thank you.